Good morning, everyone. Welcome to our Friday morning trading session, the end of another work week. Boy, the market has taken a huge decline in the overnight, and we're going to take a look at that here in just a moment. This is on our NASDAQ. On our Eagle, you can see the market finished off somewhere around here, and now we've got an opening gap down here. Actually, maybe it wasn't. Maybe huge was the wrong word. But still a substantial decline. That's going to leave a little bit of an opening gap right here for the market, which it will be interesting to see whether or not they're going to try to get in there or not. Here on the Hawk, you can see we have a little bit of a sideways congestion again. And we're actually working on our first micro-macro cross signal. This is right out of the gate. You know, I'm not always a fan of taking signals right out of the open, but we might throw a onesie on this one, just see where it goes, if it goes. And the problem with this, of course, is the sideways congestion. Right? We don't really know yet whether the market's committed. This is a first micro-macro cross, high probability signal, but even so, when we encounter these areas down here, we get this, I'm looking for this test retest thing to happen, and then the market to fail and hopefully head lower. A little bit of a struggle going on at the lows. We should have comparable signals with the Eagle, and we do right here. We're getting an Eagle signal. We have a chance with a second push on this bar. In fact, I'll take it just below the low of that bar, and I should be able to cover above the hard edge. Once again, it's the opening signal. Things are always a little bit dicey out of the open. Looking for the sellers to step in now. This will be the last chance for the sellers to turn this market around. Before we end up sloshing back and forth some more. Yuck. Oh, see that? See how the sellers are losing their grip on the market? So it does appear as though they are going to try to get into that big opening gap. Oh, they didn't even give me a chance there. Scoundrels. Okay, so now we're seeing the same thing the other direction. We're getting we had the breakout to the upside. Now we're looking for the retest. Oh, I really should be going in with fewer contracts here. And I should be covering it down there. Maybe today is going to be the real choppy session. Well, yesterday was fairly choppy also. Of course, the Tuesday and Wednesday sessions were very nice, had a lot of follow through to them. So here's now our first micro macro cross to the upside. We know that it failed to the downside. If it fails to the upside also, then this could be a very good indication that the market is not going to play nice today. Get up there. Ay, ay, ay. Okay, I need to see the buyers step up here. If the buyers do, what I'm going to do is I'm actually going to add another contract up here. Excuse me. Because this will show me now that the buyers have control of the market. They can't slip any further than they are right now. We're also getting a macro pullback signal, which if I wanted, I could enter on the macro pullback for my additional contract. It's a little riskier. Oh, you guys. Uh-oh. Oh, this is why. Oh, see. Okay, thanks, Jim. Jim says, good morning, Eric. Oh, next week is triple witching, if I'm not mistaken. Oh, I thought it was this. I thought you were pointing out that it was this week. That would explain why the market is being so uncooperative. Triple witching, for those of you who have never heard the term, occurs when you've got the stock futures, the stock options, well, and the stock index options all expiring on the same day. And it causes a lot of havoc in the market. You can usually search the dates. Oh no, they're going to fail on this side too? That is not fair. It's not fair, I say. Get up there. Ay, 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 ay. Oh, the advanced decline, very lopsided to the downside. All right, well, I'm going to cancel this. About to get tagged going the other way. I need to double check something here. Did that actually find our profit target? No, it didn't. Oh, way to go. Suncombe says the Russell did a better job. He managed to grab 10 ticks on it. Well, good for you. Yeah, we've got an odd setup here now. All right, let's see. So we're working on a trend change signal now here in the Falcon. Can I cover it up there? Yes, I can. As you can see, I'm being a little bit gun shy. About my entry and exit. The market not cooperating at all. I try to throw a runner in this one. So we still have our trend change signal. We're developing another trend change signal at the moment. In fact, I should wait for that one. Had a nice little green bar sell. I think I showed up a little bit too early this morning. So here was a green bar sell. I would have taken it below the low of that bar. Even here we're starting to sweat the trade a little bit. But better result than what I got out of the hawk this morning, which gave me a failed signal both directions. That is very unusual, especially for something like the first micro macro cross. Now, you know, when you take a couple of hits like this, it's important not to lose your head. If you start feeling anxious about what's going on, stop trading. Just unplug. The markets won't go anywhere. Last thing you want to do is get stuck revenge trading, where you just start throwing in orders, excuse me, trying to guess which way the market will go. All right, so here we get our swing signal. We're right back down on these lows. This is a little better than what we had because the sellers picked up the market here. The buyers obviously showing support here. So this trade is looking like it has a little bit more going on for it. If it fills here to the short side, we might see a little bit of follow through. Yes, Michael says, like Richard was saying the other day at the webinar, how do you feel? How does that make you feel? But you know what? Joking aside, we do stupid things when our emotions get the better of us. Okay, we're going to let that simmer there for a moment. Got comparable signal here on the Raptor, which I'm going to throw in a sell order, which I just got slipped on. Okay, I'm going to hold my stop back just above that last swing. There we go. All right, well, looking for a little bit more follow through on this now. One one nice thing about the Trailblazer, of course, is that you can hit your buy and sell market buttons to initiate the trade. It's much more of a one-click system to put your order on. The downside is that sometimes you end up entering late, as I did here. I would have much rather sold 44.54. Instead, I sold 44.52.5. Now, of course, if the market is committing to a direction, it's not going to really matter. Okay, come on, sellers. So the sellers broke through here. The buyers hitting them right on this support line at 44.51.5. We really need to see some selling action here. Jim is asking for a trend line. All right, let's shoot a couple trend lines across here, see what we got. Okay, I'm going to go to the Eagle because it looks like we've got a lot of real estate to cover here. So the first trend line we have runs something like this. Yeah, we're coming up a little bit shallow here. A little bit of a break here. Oh, I wish I had shot that trend line first thing. Look at that green bar sell right off that trend line. Now there was a high probability signal. We know the green bar sells tend to be high probability signals anyhow. This is on our Eagle. But when it coincides with the trend line that nicely, I could have saved myself a whole lot of grief this morning. So we've breached the top, we've breached the bottom, and no follow through either way. Oh my gosh, you guys, you're killing me. Oh, you're joking. They just tagged me again. Wow. All right. Well, I'm going to hang around because of the room, but if this were a real trading day, if I didn't shut it down after the first two failed first micro-macro crosses, I would definitely be shutting it down now. The market is not cooperating. We are not getting follow through on our high probability signals. Yes, you could make a case that perhaps I rushed into one of the signals, but really two of the signals, or at least one out of the three signals, should have reached their profit objective. So it's not a good day to trade. They're just running stops, you know, they're swinging too deep. We're still holding on to our Falcon trade, but not by much. got to give them a few minutes here to sort themselves out. Jim says the advanced decline still sitting at around a negative 1400, which is very bearish. We should be looking for selling opportunities today, but my goodness, if the sellers can't follow through either, I don't know what's going on here. In hindsight, of course, we did have a couple of signals that worked here. The first micro-macro cross, the macro pullback, the green bar sell, all these worked to the short side, even though our first micro-macro cross failed miserably. Now we're into yellow bars. 1, 2, 3. We'll see if it comes out with a fourth signal down here still to the short side. That could be a 4-arrow consolidation. Funny thing is though, well, not funny. Normally, you know, if you get a signal like this and it's a high probability signal like your first macro cross and you go to sell it and it fails, that normally opens up, that normally opens up the buy side. That's why I tell you, if I have a signal pay off in one direction, I'll tend to stay with that direction. Well, if you have a losing trade, it pretty much tells you the same thing also, that if they're not paying off to the downside, you can anticipate that they're going to pay off to the long side. But of course, they didn't do that either, which makes things a little bit more difficult to get a handle on, which is exactly where we're at right now. We are essentially looking at a range-bound market that's got an enormous range like this. Okay. Jim says we got a yellow bar sell buy coming up. Now I believe this is on the NQ that you're looking, not on the YM, although the YM will give us a similar look, I'm sure. Here's the YM. No, it wasn't the YM, it was the NQ. So we do have a test of the extreme here. We are producing a buy signal. It is against the band. I prefer to see at least the buy signal print in sync with the band, but even so, hasn't engaged the signal just yet. Yeah, Jim threw a... Okay, now we do have a double pullback signal. Now this is one that I will try to... Okay, we hit the signal. Now the double pullback into the hard edge, right? So pullback, comes out, prints a signal. This signal tends to have some follow through to it. Again, a high probability signal. And I did go in with 2 contracts. Might have been more prudent just to throw one in there, see if I can squeak a runner out. Okay, you guys. Somebody's got to take that low. The Eagle also producing a signal. This is our with trend signal. This is the bar that flipped the ATR over, so we could look to sell that. You can see we're kind of right in the middle of this trading channel that we've outlined. Now this is what we refer to as a soft edge bounce. As you can see, it's, as far as probabilities go, it's more probable to sell the top of the trading channel than to try to sell through the middle. So, you know, word of caution on that eagle trade, that's not exactly a juicy looking trade. Oh, and here they come. They're going to try to run the highs again. Wow. Oh, look at this. This is just unbelievable today. Okay, I'm going to hold my stop up here. Yeah, this is, we're going to see a failure here to the upside in just a moment. If the sellers can't get back down here to this 44.52-ish, 53, 44.52, 53 area, this will be another spank. I'm holding my stop here just because the market is undecided. You see, we're pretty much making a pennant style formation at the moment. I could put my stop in here, I suppose. I'm looking to avoid being stopped out by a tick or two only to watch the market reverse and finally head lower. These are the kind of situations where you just resign yourself that this is going to be your risk amount, right? And if you can afford the risk, you stay with the trade, especially on a day like today where it's so non-committal. Okay, I'm going to scrub the eagle trade right now. Jim says on the YM, all the wicks, the buyers are trying to buy in at the lows, so we're getting a lot of tails apparently on those bars. See, what does it for me is the hawk. See all these yellow bars? See how they're clustered, how they crop up so quickly, one right after the other? That is a danger sign. That is your cue to keep away. Yeah, like Jim says, Eric, I imagine you'd be done by now. There's no pulse on the market today. Absolutely right, Jim. In fact, we may be closing up the room a little bit earlier than usual today, unless we start to see some activity here. So this is a good day for questions. Michael's got one here. He says, Eric, you often use the flip of the ATR as an entry. I have difficulty seeing which bar actually flips it as well as the entry off of the flip. Okay, let's take a look here. So the ATR on the Eagle is this squiggly red and blue line. And of course you can maybe I should make it a little bit thicker for you guys. Maybe it's too difficult to see. So let me enlarge that. Okay, maybe that will be a little better for you. So what we're doing is we're looking for the signal to be in sync with the ATR. We're just using it as a secondary filter. Why? Well, because a lot of times it does help keep you on the right side of the trade, enough that Mike Filigera convinced me that this was a good thing to have. So at any rate, here we are. We're producing a green bar sell signal. We've produced the warning dot, triangle, hash mark. All the parameters for the trade are here. All the parameters are met. However, we're currently against the ATR. Now that does not mean that you cannot take the trade as is. But what I tend to do is I tend to let the ATR flip. So you notice this next bar prints, and now the ATR is printing above here. It traded through the ATR, and now the ATR is above there. So rather than enter on the hash mark, I'm actually going to enter below the low of the bar that flipped the ATR. Oh, that's a bit of a rhyme, isn't it? So now that the ATR is in sync with the market, I will use that bar as my signal bar. And, oh dear, we just came up short of our profit objective there also. This is the problem sometimes with delaying your signal, which we've seen before. Here we have another signal. It too is against the ATR. So here is the bar which has flipped the ATR. This is the bar that I would be looking to enter below. And you can see this one too did not follow through. Now that is the exception, not the norm. Normally you see this type of thing, where you get the high probability signal, you get the ATR flipping over, you place your order, and the market, oops, I'm sorry, and the market tails off. All right, that's what normally happens. But today is obviously not a normal day. It looks like we got all our orders failed, and now they're trying to go to the upside. So it's Jim says, okay, so what's your handicap? Oh, he knows I'm thinking about going to the golf course. It's a beautiful day today. And I got those new set of ping golf clubs, which I'm anxious to get dirty again. Now, what's so misleading about a day like today too is that you get these moves like this, and in hindsight, it's very simple, right? You look at it and you say, oh yeah, well, there's your trend change signal. I would have bought in here, I would have covered down here, and boom, up she goes. So I don't know, maybe they are starting to settle in a bit. Maybe we are going to see some real signals. But I am very leery after those two failed signals out of the open. When you hit a day like today and the market is not behaving, and you seem to be incurring loser after loser, it's important not to dig yourself too deep of the hole. This is actually, it's probably a good thing this happened this way today, because we haven't addressed this issue for a while. You're going to have days where you have losing days, and it is no fun. No fun at all. But believe me when I say you will be very happy taking a loss that you can afford versus digging yourself into such a deep hole that, well, you really hurt your trading account. I have met people, yes, plural, who have blown through a $20,000 account in a single session because they've gotten carried away. Because they get angry at the market. And they end up blowing themselves up. Don't be one of those people. You should have a loss limit. You should have a loss threshold where if you have lost X number of dollars, you stop trading no matter what. And if you feel like you still have to be in the room watching the charts, then at least go into sim mode. Oops. See, I can't do two things at once. There we go. If you feel you still have to trade, then at least go into sim mode. Now, my own loss threshold is 5% of my trading capital. So if I lose 5% of my account in a day, that's it. I pull the plug no matter what. Regardless of whether the market came back later that day, regardless of whether I could have made up the losses or something, I stopped the bleeding. And I think that's important. Oh, nicely done. Jim managed to bag 10 points on 3 contracts in the YM. Well done. Now your pain or your limit, your loss limit, can also be a pain threshold. It doesn't necessarily have to be a certain percentage of your account. I chose 5% because if I lose 5%, there is a very good chance I can make that up in a day or two. If I lose 10 or 15 or 20% of my trading capital because I start to get stupid, that's going to take me a lot longer to recover that kind of loss. But a 5% loss I can usually, like I say, make up in a day or two. So it's not the end of the world. I guess is what I'm getting at. Oh, you guys are doing great. Suncom has got 32 ticks on the Russell so far. Well done. I should have you guys hosting the room today. But like I said, if you, it's a good idea to have that safety net. You can thank me later. John asked a good question. Eric, do you also stop trading if you make 5% in a day? No, not usually. Although I've never really considered it from that point of view. What I usually do on the profit side of the equation, now this is an interesting concept also, And I'll review it real quick for those of you who haven't heard it before, but I'm a big believer in having a trading quota. And I believe that if you're a small trader, your quota should be smaller rather than larger. And I'm going to expand on that in just a moment. I just want to show you something here. Look at this. This is a late filter entry signal, textbook late filter entry signal. And let's cover it below that support and resistance line. Let's just watch this unfold. We know this is a very high probability signal. And watch this. They're going to probably take it down here and tank it. So the idea behind a trading quota is that you always finish the day with a positive result, whether it's a big sum or a little sum. And having a trading quota also allows you to focus on high quality signals. You don't feel as rushed to take a lot of trades. And actually, that's what I should have done today. I should have been a little bit more, well, a lot more choosy in the signals I was looking at. Normally my quota is 3 trades. So the idea is that I'm going to have 3 trades today and I'm going to finish the day with a positive result. If you're a really small trader, I suggest you start with a quota of only 1 trade. Try to get 1 winning trade and then call it a day. Whether that winner is $50 or $500, it doesn't matter. So what that enables you to do, it actually enables you to start building your account. Even at $50 a day, I think I've shared with you, if you can do that every single day, at the end of the year, you'll be up $20,000 on a single contract once a day, once a day is $10,000. If you do it twice a day, that's $20,000. You know, well, even $10,000, pretty big chunk of change. Probably doing better than your savings account at your local bank. A lot better. So what I do with the trading quota is, well, let's do an example. So let's say we have a quota of 3, and we took a losing trade out of the gate this morning that put us behind, well, for easy math, we'll say $200. Let's say your next trade was a winner and you made $100 on it. So you've taken 2 out of your 3 trades, but you're still down $100. Let's say you take your next trade and it's a winner for $250. Now you're up $150. You've had your 3 trades. Your day is done. You can go into sim mode. You can stop trading altogether. But you've banked a positive result. Okay, now that's a very good way to start. If you take your 3rd trade and let's say it's a $100 loser, now you're, what were we at? -100. Now you're back to -200. You've taken your 3 trades, but you do not have a positive result. So you keep trading. You look for another signal. And then when you find another signal that you like, you take it. Let's say it was a $200 winner, so now you're back at even. So you've reached your 3 trade quota. You've actually taken 4 trades now, but you still don't have a positive result. You have a 0 balance. So you look for another signal. And let's say the 5th trade works out and you make $100 on it, you stop trading. So now you've had your 3 trade, you've met both of your requirements. You've had your 3-trade quota, and you finished the day with a positive result. Yes, it's only $100, but it's better than continuing to trade, lose that $100, and maybe end the day with a negative $500 balance, plus all those commissions and fees. That's something that a lot of people ignore as well, because commissions are so cheap nowadays. They think that, oh, well, I'll just keep trading and trading and trading. It's like that fellow who came to me who wanted to trade 100 times a day, or wanted me to show him how to trade 100 times a day. The commission alone would have killed him. Never mind the exchange fees. Well, if you're going to trade 100 times a day, the broker will work you a very good commission, even better than the discount commissions that you see online now. But the exchange fees would have killed them. If you're going to trade 100 times a day, you got to buy yourself a spot on the floor. You got to get in there where you can trade with the big boys. But having that trade quota, like I say, if you're only looking for 3 trades a day, or 1 trade a day, are you going to be in a rush to take the very first signal? No. Almost everybody who comes to me for help overtrades. Almost without exception, they overtrade. If you want to become a better trader, trade less. That is one thing you can do right now that will improve your trading. I'll well, I was going to say I'll bet you dollars to donuts, but obviously I can't. But as much of a guarantee as I can offer you via the internet and the airwaves here, I will guarantee it will improve your trading. Yeah, like Jim says, 100 times a day, what strategy would you use and you'd be mentally exhausted? Yes, absolutely you would. Actually, it's not that difficult to get 100 trades a day, but you end up watching a 30-second chart. You forget the range style bars like what we're watching here with the mean Renko bars. You forget tick charts. You go to a 30-second chart. And you're essentially just looking for 2 bars to form in the same direction. If you get 2 green bars, you buy. You get 2 red bars, you sell. So it's very possible to get 100 signals a day. But, trying to manage those types of positions where you can actually realize any kind of substantial profit. Here, we've got nothing going on. Why don't I build a chart and you can see what that's like. Now, please, do I need to put a disclaimer up? Please, nobody, don't do this. You're going to die from all the caffeine and cigarettes that you're going to be wired on. All right, so here's a 30-second chart. So you see you get 2 red bars, you sell, you get 2 green bars, you buy. And we're horsing around today. So let's yeah, I guess we'll go with the hawk template. Oh, I gotta change this background color, 1 sec. Okay, oh, and my axis colors. There we go. All right, so 2 red bars, we're going to sell. So you almost need to use the buy and the market buttons here. There's no other way to get at it. Oh, I really hesitate to show you guys this because I just know somebody is going to use it. In fact, let's get rid of this. Let's put the Trailblazer on. It might be more effective. Yeah, like Jim says, it's really nothing more than a video game with a buy and sell button. And it can be a very expensive video game at that. Okay, so 2 green bars about to form. And if it, nope, not yet. If it gets above the high of that other 30-second bar, for this kind of thing, you would also need to have your bar timer on here. So you can watch the countdown. Or the handy dandy Omni timer from Indicator Warehouse. So 4, 3, 2, 1. Get up there. Anyways, that's how you would do it. So if you want to put yourself in an early grave, there you go. And I don't mean early grave financially. I mean you will be so wired on caffeine and cigarettes, you won't be able to see straight. You'll feel your heart pounding in your chest. Actually, I think this may have come close to the trend line. Oh, you know what? That's not a half bad buy. We'll see whether or not it follows through. And then I'm going to kill this thing because I just know somebody is going to start watching a 30-second chart. Let's put the Omni timer on here. It's prettier. If you don't have the Omni timer, I do believe Indicator Warehouse still offers it. And I want the countdown. There we go. There's our 30-second countdown. Uh-oh. Yeah, like Jim says, a black box could do this and you could go play golf. Yes, I suppose you could. I'm more interested to see whether this trend line support is going to hold. See, now we're going to get 2 red bars and we're going to need to reverse. Well, we're almost to the 7:30 mark. I'm going to put this away. This is dangerous. The 7:30 mark, when the market starts to perhaps change direction if there has been a dominant trend, which I don't know if we can say that today. See, look at this. Here was that late filter entry signal, which we know to be a high probability signal. We followed a trend change signal. Every reason in the world to believe the market should head higher. Yes, we encountered primary support here, not the end of the world. We did produce a double dot, again, not the end of the world. The late filter entry should have overridden all that, and instead we get this. We get a trend change to the downside. Just not, well, I guess one of those days. Well, I'll hang out here for a few more minutes. If anybody has any questions, you know what, this is a good day for questions. So if there's any burning question you have about trading, this would be a good time to ask. Otherwise, we're gonna button up shop. Oh, Jim says, what's your handicap? Humor me, please. You know, a lot of days I play better than my handicap. I'm a 15. My putting lets me down. I can easily go through my round and shave a half a dozen strokes, but that's golf. Jim's a 14. Craig is asking, to save a trade manager template, how do you do it? And do you need to do it for each bird? Yes. All right, how do you save a template? What you want to do, so I'll show you the basic changes that I make to the trade manager. And in fact, what we'll do is we'll remove it entirely. So it will be as though I'm putting it on for the first time. So you double click on Trade Manager. Before you apply it, it's easy to make some changes to it. So you roll to the top and you can go through each of the individual settings and tweak it however it is you would like it to be. Out of these top ones, the trail indicator enabled, this just means that it's automatically going to have a stop in place for you. Your invalid stop is when your stop strategy is against the market. So in other words, if you're looking to sell and your stop strategy is down here, your invalid stop will default to this value. So by default, it's 10. I tend to make it a little bit bigger because I can always adjust it after it fires. Auto break even. To turn it on, this is where you're going to go. And you can have your break even trigger. By default, it is at 15. Because this is the hawk, I tend to dial it down to break even when I get about 80% to my target. You can preset your default strategy. I leave it at the ATR. Plot bar swing high low. By default, it's set at 5. I usually like to have it down to 2. And then the rest of this, or this section through here, is mostly cosmetic, colors and such. If you like to have the order bigger, This is where you would change the font. And I tend to like to see the order print on the right side of my chart because I have a bit of a space here. I leave a space. So rather than have the order print on the left side, which is the default, and maybe get all jumbled in here with the bars, I like to have it print on the right side so it's easier to read. Order type, you can set your default order type. I leave it at stop. Account currency, money management, the default strategy will be risk. Risk volatility percent, by default it is 1. I dial it up to 2. Click and tick. Click means you're going to set your profit targets manually. Tick means it will be done automatically. And this is how the trade manager will automatically break up your profit objectives. So T1 percentage, target 1 percentage. I'm essentially all in, all out, 100% on target 1, and target 1 will be 10 ticks. Now when I have this the way that I want it, I go here to save and I give it a name. You can call it Hawk, you can call it My Hawk, whatever you want. And then save, hit enter, and now you will have that as one of your templates. So when you build a chart or when you open up your charts in the morning and you want to put your trade manager on, if it doesn't automatically load the trade manager when you go to your strategies window, you just go here, click on Hawk, and choose your account. And now your Enable tab is set at true. Click Apply, and you're done. So now, and I'm just going to throw an order in here so you can see how it works. You can see we have our break even, we have our risk amount, we have our auto stop that we like. Let's see if our bar high low is, oh, bar high low is still not quite right. Okay, I must have done something wrong. Now watch what happens here when I do if I did a buy order. Remember we have our stops against us here. We're going to watch now the invalid stop work. So I throw in a buy order and you see my stop is down here. It's 20 ticks away. And I did that 20 ticks because I can always adjust my stop, right? I don't want my stop so tight that as soon as my order prints, my stop is right there. I want my stop far enough away that I can pick it up now and I can actually drag it into where I want it to be. Okay. So, and you can do that for all your charts, set them up the way you want, and then when you reach your, wrong thing. In your strategies window, then when you reach the save line, just give it a name, choose your account, and that's that. It will always be there. Look at the Geiger counter here. Look at those nasty spikes in there. Oh my gosh, this is brutal today. Patrick is asking, can I place an OCO order with the Trailblazer? Not in the same sense that you can place an OCO order with the Trade Manager, which actually has that OCO function. With the Trailblazer, you need to do it a little bit differently. What you're going to do is you're just going to right-click on your chart. Well, actually, I guess it's not an OCO order in the strictest sense that one side will cancel after the other. So no, I suppose you can't. You're just going to right-click on your chart, manually place your orders, curious here. If this fills to the short side, whether this, no, it didn't pick up my buy stop as the trailing stop. I thought maybe Trade Manager would take my buy stop and turn it into the trailing stop, but it did not. So if you're going to do an OCO style order, you can do it by right-clicking, but you're going to have to be aware that that order needs to be canceled manually. All right, so maybe they are starting to settle in now. John is asking, Eric, do you have your favorite settings documented anywhere? Yes, in the trading manual. By and large, I go with the default settings for almost everything. There's not a whole lot of settings that I end up tweaking, so to speak. So after a rather painful first hour, it looks like they may finally have settled in. I can't get over the Geiger counter. And look at this. These are like the teeth on a skeleton ring or a skeleton key. You don't normally see the buying and the selling drop off that dramatically, or spike that dramatically for that matter. It's like there's a flurry of buying and selling and then they disappear. Nobody's there. Another flurry and then they disappear, which looks like is what's happening right now. Normally there's a more of a progression, higher or lower. I know I've mentioned this before, but I'm really concerned about the lack of the follow-through on the quality signals today. It's not to say we haven't had moves, it's just which move do you trust? I guess we did have a first micro-macro cross payoff there. And this first micro-macro cross obviously paid off well. But still, ay. Working too hard today. Mike says the E-mini is in the tank, which doesn't surprise me, given the NQ falling off. Yeah, I don't know. Jim says, is it the high-frequency traders? I don't know what's going on today. I really don't. The market hasn't acted this wild for a long time. Probably a good 6 months even since I've seen it this erratic. Fridays can be weird though. You know, Mondays are always busy because everybody's coming in, getting their orders on for reacting to news over the weekend and so on and so forth. Tuesday, Wednesday, Thursday, okay, It's like my friend says, Monday 1, Monday 2, Monday 3, Monday 4, Friday, Saturday, pre-Monday. He has a calendar like that. But Fridays can be really weird sometimes. And this is definitely one of those times. It's, like I say, the high probability signals. Not to say that every late filter entry has to work. We know, even as good as that late filter entry signal is, it is not 100%. But when you take that along with the failed first micro-macro crosses, the failed macro pullbacks, the failed double pullback in the Raptor, it's like, what is going on here today? These signals should not all be failing. And fortunately, it doesn't happen often, but every once in a while, the market just does not want to cooperate. And on days like that, well, good day to go do something else. Crude oil made a nice move lower off of the green bar sell, the hard edge bounce. Another green bar sell, hard edge bounce. Late last night, near the close of the Asian session, it looks like. Well done, Mark. You know what? This might be a good note to end the session on because I can't really see much coming of today. Mark says, I took the Eagle green bar sell at 44.61 quarter for a nice short, moved my profit target and got an extra $100 for a $300 profit. He says, I'm done. Well done, Mark. Yeah, that's the thing to do today. If you are going to trade today, you really got to hold out for the higher probability signals. Well, I stumble over that as the words are coming out of my mouth, because we did try to take a couple high probability trades there and they did not cooperate for us. But you know what, guys, I think this will be a good time to shut down trading. We're going to close the room up a little bit early today and make it a little bit of a longer weekend for us. All right, you guys, be careful out there. If you are trading this afternoon, I could see a lot more sideways action going on. I'm tempted to say the NQ will head lower, but that great big opening gap is going to be problematic. Be careful. We'll talk to you Monday. Bye for now.